ITC's September quarterly results were in line with expectations. In our ideas for profit today, we'll discuss the key earnings fine print and also what should be investors' strategy post the Q2 earnings this time. While ITC's revenue declined by 3% on a year-on-year basis, and that was on the back of decline in the cigarette revenue that declined by 4%, hotels which declined by 80%, and paperboards declined by 7%, and that's again on a year-on-year basis. FMCG and agri-businesses grew by 19 and 14% respectively. Also, if you see, gross margins remained at 60% as you compare it with 64% that was seen in September 2019, and that was on the back of the change in product mix, the lower cigarette revenues, and also the higher raw material costs this time. Now, EBITDA declined by 18% again on a year-on-year basis, with a contraction in margin on account of lower gross margins and higher other expenses. Now, thanks to the lower EBITDA and higher effective tax rate, the net profit also declined by 10% on a year-on-year basis for ITC. Now, cigarettes, which actually contribute around 40% of the revenues and 85% of the EBITDA, faced headwinds, and that was on the back of the localized lockdowns that were seen. Now, with the easing of restrictions, say in September 2020 or in this quarter, the cigarette demand is actually now coming back. The concern for ITC, however, remains the availability of the smuggled cigarettes, and that's despite the several actions taken by the concerned authorities so far. Now, FMCG constitutes around 25% of the revenues, and in this segment, if you see, the company continues to invest behind the various brands and also has witnessed about a 20% year-on-year growth in revenues this time around. Now, discretionary or out-of-home consumption categories, they have also seen sequential improvement and is almost back to pre-COVID levels in this space particularly. The personal care products business continued to grow at a much faster pace, driven by the Savlon range of antiseptic liquids, the hand washes, sanitizers, even soaps as well. Now, sales through the e-commerce channel, that also more than doubled during Q2, taking the share to over 5% of the segmental revenue. Now, the network of, say, rural stockists, they were also scaled up, and that was along with the targeting of rural markets in certain states that actually had witnessed a reverse migration due to the pandemic, which actually led to strong growth in the rural sales. Now, ITC also launched over 70 new products during April to September 2020, which also again compelled value propositions and execution strength. Now, FMCG EBITDA margin stood at, say, 10% as compared to 7% back in September 2019. Now, a continued focus on, say, cost reduction, the higher operating leverage, the enhanced operational efficiencies, also the portfolio premiumization, and even the product mix enrichment, they have all put together helped mitigate the impact of negative operating leverage. However, it is still way below some of the larger FMCG players as well. Now, agri-business revenues grew by 14% on a year-on-year basis, so that's something that we need to keep in mind. The restrictions on, say, travel and tourism, that impacted the performance of the hotel segment this time, where the revenues were seen down nearly 80% on a YOY basis. The paperboards, paper and packaging revenues also declined by 7%, while sequentially, however, they have actually seen improvement this time around. Now, we do expect the cigarettes, the hotels and the paper and paperboards segments to recover going forward, and that is on the back of the improvement witnessed on a month-on-month basis that we are seeing already. So the trend is improving there. Also, ITC will continue to remain aggressive in the FMCG space, and market shares and volumes are likely to remain higher in this particular segment. Going forward, our concerns continue to remain whether ITC is able to maintain and increase its market share in the cigarette business per se. ITC had stated its dividend policy also, and effective FY 1920, it plans to distribute around 80-85% of its earnings as dividends in the medium term. Now, while ethical consideration definitely keeps ITC out of the radar of many investors, we do see merit in the valuation currently, especially with the non-cigarette portfolio really increasing. ITC is currently trading at a PE multiple of, say, 14 times FY20 based on the FY22 earnings, which is at a discount to many of its larger peers, which are trading at 35 to 40 PE multiple. Now, investors, therefore, with a long-term view, can actually look to accumulate the stock.